Well, we're in that unfortunate phase of the market where only one thing matters. Hi there everyone, welcome to the Traders Circle Weekly Market Update. It is Tuesday the 10th of March 2026, and before I get started, you do need to be aware that whatever I say is general advice only. The one thing that matters is war. Unfortunately, there is a terrible human cost, a human tragedy going on, and yet we're going to weigh up the financial consequences. For the Australian market, it's the only thing that matters at the moment, the only game in town, and all our stocks are only really following what they think is happening over there. Overnight, we saw a big rebound in US stocks, and that triggered a rebound in the Australian market. Our market fell off strongly on Monday, so the rebound in the US overnight triggered a big rebound here today. And that was all because Trump came out and said the war's close to finishing. He thinks oil's going to fall strongly in price from here, and everyone's going to be happy. Now, Trump made that up. He purely made those statements up to move the markets. He made those statements up to lift share prices and to push oil prices back down. Because the reality of the conflict is, the war is still ongoing. It's basically a purely market manipulatory move. And it worked. We did see oil prices retreat from their highs. They got up to about 120 US a barrel, and they fell back below 100. We did see US equity markets reverse from their earlier selling. They were down a couple of percentage points, and they rebounded to finish 1% or so higher. So his statements did work. And I do just want to sort of caveat that and say don't be too optimistic too quickly, because the situation on the ground still looks pretty negative. We're still seeing Israel and America attack Iranian sites. We're still seeing Israel blow up Iranian oil infrastructure. We're still seeing Iran retaliate not just against Israel and the US, but against their allies in the region. They're attacking in some cases the oil infrastructure of the US allies in the region. I think there was an attack on a Bahrainian oil refinery overnight. All of that points to further selling. It points to further rises in oil prices. It doesn't point to an equity rebound. And so I do just want to sort of give a little bit of a warning, because I know a lot of people were enthused by the rebound in US markets overnight and by the rebound in the Australian market today. We're not out of the woods yet. There hasn't been any sort of sign of things slowing down on the ground. In fact, I saw a chart this morning, some research from JP Morgan Commodities Desk, that said that about a quarter of all oil exports have been cut off over the last week. And that trend is only going to worsen in the short term. So, I don't think we're out of the woods yet. I think we're going to see oil prices hold up or rise further, and that could lead to more selling for equity markets. Now, it could also mean a bit of a rebound in inflation. Now, energy costs and oil prices are a key component of consumer prices, but you've also got to consider that, stores need to ship products to their stores. Miners need to use oil to power their vehicles. Farmers need to use oil to power their vehicles as well. So when oil prices rise, it pushes the price of other things up as well. Markets were pretty confident we were going to see another US rate rise in the coming months, but it doesn't necessarily look like that's going to be the case now, because we should see a bit of a spike in consumer prices after this conflict, or because of this conflict. Similarly, the Australian market was looking at maybe we're going to get another RBA rate rise. That's almost guaranteed now that we will get that additional RBA rate rise. Now, it is worth saying that what's a higher interest rate going to do to the conflict overseas? What's that going to do to sort of slow down the price of oil? It's going to have no bearing at all. And that may well be the case, but regardless, they don't want to create a situation where inflation starts running out of control. And so I think there will be some difficult conversations, some difficult decisions from central banks. And again, we know markets don't really like the higher interest rates. If we do see further rate rises here in Australia, that's another negative weight on the Australian market. And if the US market doesn't get that expected rate rise, again, that's going to be an additional negative factor for US markets. So let's have a quick look at the charts for this week, guys. As I mentioned, there's only one game in town. it doesn't really matter the other news that's going on at the moment. Markets are focused on this one factor at the moment. US markets, they were strongly lower overnight. They opened strongly lower and they pushed lower initially. And as I said at the start, we had some comments from the president who basically tried to manipulate markets higher, and it worked. They rebounded overnight. They did, however, close below the pretty key 6,800 point level on the S&P 500. That was a pretty key hold for me because they'd held that level as support for such a long time that with it now holding as resistance, it's quite the bearish technical sign. In terms of downside targets, who knows? Like I said, we're witnessing, a market being driven by a war, and the news and events coming out from that war are not going to be determined by the chart here. So yeah, I think we'll probably see further selling. My downside target for the US is probably 65.50, but I did see a report, again, I think from JP Morgan this morning, that said they could see a 10% correction, and that'd be 6,300 for their market. Having a look at our own market, we're much closer to the correction. We've actually fallen a lot more already. We've fallen a lot stronger than the US markets have already. And this is the chart of the Australian market here, our top 200. We basically stalled out around 9,200 index points, and since then we've been in a pretty strong fall, almost a free fall. We broke through the longer term trend line. We broke through a few pretty key support levels, broke through all the moving averages. Yesterday we fell very strongly, but we managed to reverse intraday, and we sort of held above that support level around 85.50. And today we sort of bounced back up, but sort of held in no man's land. We didn't return to some of the key levels. We weren't able to maintain our strength, and we closed, below our opening level. For our own market, I've drawn in roughly our 10% correction level, 8,300. And now we're just sort of pretty much waiting to see how the news develops, how the conflict develops, whether we correct, whether we bounce back up. And as I said at the start, it is all going to be about the developments in that conflict. If we see further escalation, that could be something like American boots on the ground from the US side. It could be something like, mining the Strait of Hormuz from the Iranian side. So if we see an escalation, we might well see a correction on the Australian market. If we see a de-escalation, and that could be a reduction in strikes, and de-escalatory language from the parties involved, and that's where we could see a bit of a bounce back. I don't think our market's going above 89.80 in the short term. Even getting to 89.80 would take a pretty big flurry of positive news, in my opinion. So I do believe the risks are skewed to the downside. That being said, it is a positive sign for markets that the president wants to stop the selling, and eventually that might win out over his desires for the conflict. So we'll wrap it up there for this week, guys. A little bit of a shorter one because there's only one thing to talk about. Hopefully next week we're talking about how this conflict is wrapping up. So we'll end it there. Click like, click subscribe if you enjoyed it, and we'll see you guys next week.